Hello there, Sugar Plum. We're going to do a very quick macro and crypto update together about what's happening ahead and what's been going on right now. I have for you the Bitcoin chart and its overlay with the federal funds rate, also known as US interest rates. I would like to draw your attention to the previous bear market. This is monthly candles, so they're printed at the end of every month. If you look closely, and please confirm if you do look closely with me, friends, and also confirm if you're friends yourself. If you look here, you see this horizontal orange part? That is the US Fed saying no more interest rate hikes. We are going to hold. That's what happened. And if you'll notice, something happened during that time. The Bitcoin price went up. Now, if you go back to that time, what will people say? People will say, and to refresh your mind, this is what people will say. They will say it had nothing to do with interest rates. People will say during this time, they'll call it the plus token Ponzi rally. So Plus Token, I think, was a Chinese company. They were the Chinese version of BitConnect, and they were offering like 1% yield for Bitcoin and 1% yield for Ethereum. And they just collected like $1 billion. And the Plus Token Ponzi got so popular, everybody bought Bitcoin in China and started pumping it up. And wow, we got a giant short squeeze. And it was insane. 1, 2, 3, 4, 5 green monthly candles. Can you believe what that felt like, friends? I'm telling you right now, that was such an enormous rally because 5 green monthly candles in a row, that is bull market material. If you have a look at Bitcoin in 2020 to 2021, 1, 2, 3, 4, 5, 6. Like, can you imagine? This was a bear market. But the first 3 candles, they were barely moving, relatively. So the US Fed held interest rates here. And then they started cutting. So have a look at this, okay? So when they started cutting, even though it was just, if you look at the left-hand scale, you'll be able to see the cuts. So the rates were 2.5%. And then they started cutting, and guess what? That was actually the end of the Bitcoin running. Until, look what happens here. Then the zombie virus came. And so we collapsed, and we started continuing the Bitcoin and crypto cycle. So if we remember, the US Fed holding rates, even though if we look at the rates and we look at the chart and we don't look at the story, if we just look at the objective evidence here, we will say, okay, when the US Fed started holding rates, crypto seemed to love it and it seemed to price in the future. See, this is how we get ahead of the game. What will people be saying today? I have the chart of today. What will people be saying today, friends? Now, if you don't know, the Fed actually held rates, but these are printed every month. So the US Fed held rates. So this line will go horizontal like this. And they've held rates and they have not said rally, market rally, because it really is that obvious when they want it to move. Why haven't they said that? It's because of the stonk market. The stonk market is strong. So if you please allow me, friends, I'm going to actually show you the stonk market, otherwise known as SPX. If you want to have a look at it, S&P 500, okay? So if you go back here, if you go back to when, let's go back to the 2019 bear market where they actually started holding the rates. They started holding the rates around here. You see this part? See, we were under the all-time high. So this is what happened, friends. So the US stocks crushed down. So they started raising rates to 2.5%. US crushed down, and then the Fed basically went like, no more. They basically said that when it started crashing down. Basically, Jay Powell capitulated. It hit 20%, and they just went like, okay, that's it. We can't do it anymore because the economy was so fragile. And they were so worried about it crashing that they did not spook the market. So when they started holding rates, what they said was, they said, we are now data dependent. So it was about here. So around here, this zone. Do you see how the market looks shaky? It's like, oh, we're so shaky. But remember what they were anchoring to. They were anchoring to here. That was their anchor bias. And inflation was low. So CPI, the inflation number was down. It was like 2%, 1.8%. It was very, very, very low. They could not get inflation, right? Because of their scam number and scam ways. So CPI was low, and they were just worried about shaking the economy. Okay. Now, different to today, friends. Very different. So even though we got a big crash, because they're evil bastards, they only look at CPI now. CPI is high. CPI, it was 9% for America, right? During this September period, it was like 9% around here. And now it's coming back down. So the CPI was up and the CPI is doing this, it's come back down. So even though we did have a shakeup, what is their commentary when they're talking about holding the rates here? So they will say, and what they did say, what Papa Powell said, he said, oh, we might do another 2 hikes later in the year. Oh, I drink room temperature water. That's a load of baloney. You got to be able to call their bluff. I'm calling their bluff. I think, and if you'll excuse me, I think they're a bunch of poo-poo heads. I think they're just telling the people what they need to hear so that they don't get over-exuberant. Because the stock market is strong, it's handling these comments. The last thing they want is for people to start buying Doge up to $3 again. That's what they don't want. And if that happens, it's a sign of inflation coming back. So they have to tame the inflation beast. So they've got to be very careful because this ship that they steer, they've got to be super consistent. So when they steer it down, they've got to really make sure it's bottomed out before they're allowed to start steering it up. They can't go like this. They can't be super up, down, left, right. Okay? So at the end of the day, that's what the story is like. So I'm here to interpret it here with you. But the truth is, we can remove the story part. We just look at the facts. What were the facts? Okay? You can actually say, well, story is a story and it doesn't really matter because the last time they held rates, the market rallied. And what are they doing now? They held rates. Surprise, surprise. What comes in this month, friends? BlackRock Spot Bitcoin ETF. So, of course, people will say that the green candle for Bitcoin, that our optimism and our friendship and our kindness that's being shown and displayed right here, people will say it's all to do with BlackRock Bitcoin Spot ETF. But because of these cycles, they're already programmed in. It's funny. Whether it's the puppet master, whether it's God himself, the aliens, the Anunnaki, fairy dust, unicorns, don't know who it is, the government, whatever it is, it's pre-programmed into the cycles. It's like it was just always going to happen. That's why it's really important to look at the chart and not look at the news because there's always a different news every time, all right? You know, in the last bear market, it was a plus token Ponzi. In this bear market, BlackRock ETF. You know what's interesting? It's interesting to think about this. When FTX collapsed, you might be saying, who the hell was buying Bitcoin? Who? And I could tell you, perhaps some of the people buying Bitcoin were insiders who knew that BlackRock was going to get the ETF and they were planning it for 2024. So they were just sitting there on the bids, accumulating slowly. Will we ever know? No, we won't. That's why I always tell you, when weak hands are getting out, look for any reason to get long. Any reason. You just look for a reason. That's the best, strongest place to be. That's a position of strength. It's like, whoa, weak hands are capitulating. Let me see if I can buy something. Those are the actual people who win. That's contrarians. It goes, wait a minute, you're capitulating. You're saying it's the end of the world. And you think, wait, what if it isn't the end of the world? And look what happened, okay? So this is the important part to go through. And we actually have macro data coming out and it might continue to tell the story. So for this week, you're going to have Jay Powell speaking. You got GDP reports. Jay Powell speaks again. When he speaks, when Jay Powell speaks, he's basically just like a health check on the market. If the market was down 5 to 10% from where they want it to be, then he'll say, oh, you know, we could cut rates anytime. He'll say that. And if the market was too exuberant, he'll be like, oh, you know, like we're still planning for those hikes if we need them. It's very interesting how just these little words, the market reacts up and down to it. It's kind of fascinating why. It's like people just want to do what they want to do and they'll look for any word. So what me and you don't know is, even in crypto, right, people want to be bullish. So it's like, oh, BlackRock Bitcoin ETF, okay, bang, get in. You know, it's just people want to be bullish. They could have announced their Bitcoin BlackRock ETF back in their bear market 2022. It wouldn't have done anything. I promise you it wouldn't have done anything. And then, we would have been rallying anyway. But the reason we would have been rallying is the crypto market is going to be described as a front runner to US interest rate policy. So I've seen every permutation and combination. I've seen the mix and match. I've seen slightly bad, slightly good, and every mixing and matching. And I promise you, it's not the news and the stories. If you're following any influencers who are like going through these news and these stories, trying to dissect the power of what a story is, it's all useless, man. I'll cover them here for you. I'll show you how, if you want to really dissect how we view them. But at the end of the day, the story's always written in the chart. People are always pricing it in. Okay, so we have this news coming out. We have this core PCE, which is like the real deeper read on inflation. Next week is the US jobs. I've already made posts saying that the US jobs is 100% rigged. I mean, it's just as like the sky is blue and a sun does exist. Okay, the US jobs are rigged. They rigged it such that it was better than expected. I think it's now like 19 months in a row. Something ridiculous. Like maybe 15 or 19 months in a row. The highest record was like 4 months in a row. Now it's 19 months in a row, revised upwards. Obviously they're lying. That's what governments do, friends. But if you're one of those people who are going to wait for the government to come and like pat you on the back and tell you that your back is straight and then everything's going to be fine, you're not going to make it, because you just got to assume they're lying. And you know what? You'd probably do the same too if you were in their job and they said, well, if you don't lie, you lose your job. Well, that's just what they do. So instead of crying about it, we're just going to use it to our advantage, and we don't look to them for any confidence. So what do we do from here? Now that we know this is happening, where do we actually go from here? Well, if rates continue to be held up and Bitcoin goes up for the end of the year, I think a trap can form. If you watch my earlier videos in the year, I believe there might be an echo bubble where we go up, and I had a scenario drawn, and I'm going to come and show you on Bitcoin here. This is my chart, nice, beautiful green chart. Do you see this first wave upwards? This is, and this vertical line, see this vertical line, right? That is the Bitcoin halvening, 2024, April 2024. I have a pop up and then a dump into the Bitcoin halvening. Don't worry about the specifics, but if we get Bitcoin anywhere from 40 to 50K, if we get anywhere there this year, I'm telling you, I think it's a good idea to trim something out to buy back in. Only if, altcoins have started to run. If altcoins have started to run during that time and altcoins get their first wave up, I think it's a great idea. We will have to decide which altcoins are running, if any. If our favorite alts are down, if Pulse Chain Ecosystem, if Chainlink and the DeFi and all our coins are down, Hex, Vault, if they're still in their like very, very cheap zone, then you just hold them. Okay, so that's just something to think about. If we get this pop adjuster, so if you're probably wondering, hey, why are we even considering trading? This is the truth, friends. Just gather around with me, okay? If we get scammed in this area, $80,000 Bitcoin, and they scam us down, I promise you that pain will be so intense and so immense that you will regret not taking advantage of any short-term euphoria. This is squeezing every last bit of orange juice that you can get with the pulp, of course, on 3 ice cubes with your tall glass. That is taking advantage of every single part of the cycle. Of course, they're not guaranteed. It's only an if. If we get it, it would be funny if we do front run it. Everyone says, no, we're only just getting started. The halvening's next year. And then we're actually dumping on the halvening already. This has happened before, and this is what usually happens in every single cycle, friends. If you look here, there is a Bitcoin halvening, a pump and dump. Look at this. Look at pump into the halvening and then dump. And then you have, even here before that, you have a pump into the halvening and then a dump. Always happens, okay? Every single time. There was a zombie virus one where it actually did not happen just because we had the zombie virus. So we were actually pumping into the halvening. We were talking about the halvening here, I remember, because I lived here in Bitcoin. And then we had the zombie virus. So when we recovered, the market had already rinsed weak hands. So that's why. So you never know. Are we getting another black swan? I doubt it. I doubt we'll get another black swan. But this is just for us to be ready. And if you think about how much would you even rotate, it doesn't have to be much. Trim something. 10%. 10% won't hurt you. Pay 10%. Maybe pay your taxes. Do anything you want. Trim it out. And then just wait. and it depends on our alts. Like if alts have ran from the low, you never know, man. Maybe altcoins have ran like 500% in this time. And you might say, you know what? I'm going to get some out and just bid them back. You might say that. But don't forget, there's no guarantee this happens too. It's possible that even though the Fed has held rates, it's possible there's an inflation spike or something happens later on and we don't follow a big wave like this. It's possible that Bitcoin only does this, right? We don't really have a chance to kind of get up. So there's a big difference between going to 40, 50K and coming back and just like staircasing up. There's a very big difference, all right? So just to show you an example, like if you even look at here, this is a big wave up where we got so euphoric at the time. Yes, you could get out something and then just rebuy back some of your portfolio. But in this scenario, you don't have a chance. I mean, you go up and you can't do anything. It just condenses up, condenses, up, condenses, right? So we don't know which one we're going to get. But the good thing is we have this tool available. You have this tool available where we are ready if they want to, and this is the retailers, if the retailers start buying Bitcoin and crypto for this BlackRock ETF, and it will be signified by big fat green candles of Bitcoin towards 40 to 50K, we might enter a zone where altcoins start to catch up. They have their first big season back, and we're just going to have to take advantage of that once it starts to get a bit overheated. So obviously don't have your finger on the trigger or anything ready to like get out because the party's just getting started. It's just if we start to see anything messy. Do you remember just a month ago, do you remember there was Pepe season up here, April? Pepe season, Vitalik called up Ethereum to dump all the Ethereum on us. All these things were happening up here. Things started getting stupid, people buying memes. Once that started happening, you could kind of feel like, uh-oh, bad things are happening, right? So if we get that, and then we start sitting up here, it's something to think about. Okay? It's something to think about. Here's the thing, right? If you're only getting out, say, 10 to 20%, what happens if it keeps going up? Well, you just get out another 10 to 20%, right? You know, look, friends, even okay? You know deep down, okay? There is no way in hell, no way we are going to get 40 to 50K and then up to 80 to 100K and then up to 150K. That's the dream scenario. There's like 0% chance that's going to happen. They're not going to give it to us like that. I hope it does. But what are the chances of $4 trillion coming into crypto in the next 6 to 9 months? Not going to happen. Okay. So, but why I drew that scenario is that's what would be required for us to get it wrong. Do you see what I mean? Like that's us being wrong. If you don't trim, if you do trim a bit, trimming, remember? We're going to have to, remember for a non-English speaker, trim, right, equals scissors, equals 10% to 25%. Trimming, that's only a small part, just to clarify, okay? It's not chopping everything off, okay? So now you are prepared, and we're going to keep going through this. This is your lovely macro update. Tell mum and dad we love them. Like, subscribe, press the bell button and all. Catch you in the next one.